Some major Canadian institutions are making a big investment bet on artificial intelligence. The Canada Pension Plan Investment Board is one of the first backers of a new AI fund, along with TD Bank and the Weston family. The fund is being launched by Jordan Jacobs, who sold his own AI startup to TD for roughly $100 million not too long ago. Jordan joins us in the studio to talk a little bit more about the AI craze. Thanks for coming in.
Thank you for having me.
I have to say, Jordan, if I sold my business for $100 million, I don't know if I'd be spending time in pension fund boardrooms, but obviously you see a big opportunity here. How come?
I do. We've seen this explosion of AI activity in Toronto. It's really become a world center in Canada as a whole. And we just think this is an incredible moment. The one thing that's been lacking is capital. There's incredible people. There's schools now producing a lot of more talent. There's a rush of companies that have come in, both big companies and an explosion of startups, but we still lack the capital, and that's what we're here to do.
Tell me a little bit about your own story, because it sounds like when you went to TD and you worked there, you made it very clear that you were not an acqui-hire, somebody that was going to then become a lifer at TD. For people who start their own businesses and want to make it clear that, I'm going to go on to do other things. How did you strike that balance when you're also trying to do the deal and make sure your own ambitions don't jeopardize it?
Yeah, to be honest, we were very transparent about it going into it. We had built a software platform, and they were buying largely the platform and the technical talent. There were 14 of us only in the company when they made the acquisition. And so I was very clear up front and said, look, I want to stay and I want to make this a success. And the acquisition, I think, has been hugely successful, much more than they even imagined, and much more quickly. And so that really gave me the freedom to be able to go do the next thing. And they were TD was fantastic all the way through, very supportive of it. And now it's come in as an investor as well.
So you're teaming up with some heavy hitters. You understand the landscape, and you're going to look for some investments. That's a little different than what our audience is used to, right? There's a hot new area, cannabis. There are stocks. They can buy them. Cryptocurrencies, okay, you can go to an exchange and make some purchases, buy, sell, whatever. Artificial intelligence is a little fuzzier. It's not like there's sort of a big universe of AI stocks for people to buy. So what should an average investor think about when it comes to AI, how it's changing the landscape, and whether they're maybe invested in it even if they didn't know they were?
Yeah, I would say you probably are. The biggest companies in market cap in the world all consider themselves AI-first companies. So you could start with those. But really, I think as an investor, you want to look at the company and see what it's saying about how it's deploying artificial intelligence. It may be that it's a very kind of non-AI seeming company. It's doing something in engineering or construction or areas that you wouldn't think AI should apply. But they should be thinking about it already, and they should be trying things. And if they're doing that, then I think they're on the right road. The ones who are sitting back and waiting, I think, are at risk of, frankly, getting demolished.
It's interesting that you say that this is an area that's starved for capital, even as, to your point, the biggest companies in the world say that this is what we are. So you think that they would be trying to throw money at this sector to make it try and work for them. Explain that disconnect, how on one hand it's such a hot sector, everybody acknowledges we've got a great hotbed of activity here, but there's not enough capital flowing to it.
Yeah, so I should correct myself. There is lots of capital around, both from big companies like Google has started an AI fund called Gradient, and a lot of others who are investing in it. What we really mean is local capital, domestic capital. So there's been historically a lack of capital at a venture capital stage in Canada. And in particular, we feel capital that can really help these AI companies scale up, that has built a real product that works at scale. And then, in our case, we've also been on the other side, inside an enterprise, and see how difficult it is to deploy things. And so we think that we can bring not only the money, but the ability to really help mentor those companies and how to scale up their companies into very big Canadian companies.
And that's, I guess, my question is, what is your value proposition, right? And this is kind of an age-old story when it comes to VC in Canada, is we've got the talent, we've got the technology. How do we keep these companies here? Is that part of your selling strategy?
Absolutely.
Is it give you an opportunity to not have to sell it and eventually be forced to move to the United States?
Absolutely. The approach that we took is we had buyers for Layer 6 from big tech companies. We were very determined to keep the technology Canadian because it was ahead of everybody. What we really want to do now is keep these companies not only Canadian, but keep them independent and let them grow to their full potential. And so we're building an impact team, a group of people that can go in and actually work inside the companies and help support their growth, sales, marketing, ops, technology, hiring. We've identified, we think, the best HR person in the world to hire machine learning talent, and we're moving her here from the US. That in particular is a very difficult function to provide, but so we want to do that for our portfolio. So we expect to get pretty hands-on in helping companies and supporting the founders.
And you helped to found something called the Vector Institute here in Toronto. Like, loosely, the goal there was, okay, you have AI talent at schools like University of Toronto, then to kind of move into that world of starting a business or an idea or commercialization, kind of like what they have at the big US schools. And now that you're targeting some well-known Canadian investors as part of, like, do they sort of start to enter that fray as well? Is that part of the game
absolutely.
plan here?
For us, it was, so Vector was really about how do you keep the best people here and stop them from leaving and then bring more people in. So in 2 years, it's gone from 6 core faculty to over 300 PhDs. It's now one of the biggest research institutes in the world, and it's literally the world leader in AI research measured by published papers at top conferences. But the second function is, well, the second one is to produce students, and the third one really is to push out companies. And that's where a lot of the bigger investors want to have proximity because they want to see the disruption before it disrupts them. So for us, in going to a bunch of the big Canadian funds and saying, you should be in this, you should have visibility, I think they understood that and they recognized that it's going to impact their theses across everything that they do. Public company investing, PE investing, infrastructure. They need to be putting it through the prism of how is AI going to disrupt this business that I'm investing in? And to understand that, having us as an investment, they would get more of that insight.
Are there a lot of attractive opportunities right now? What do you think of valuations? Are you thinking now is a good time in the cycle to invest, or are you kind of gathering this war chest, hoping for a pullback, and then getting ready to deploy?
Yeah, I think there's been a tremendous amount of hype, and it's caused a flood of companies, of funds to come in and invest in companies that are not real AI companies. I think one of our differentiators is we can understand technically what's real and what's not. We also see deal flow very, very early. A lot of this stuff we see when it's in the lab before it's a company, and then we help them incubate it out into being a company. So we're able to write a check quite early at a better valuation. I think if not for that, we wouldn't have done this. But I think ultimately you're going to see a bit of a pullback over the next little while. The kind of pretenders and those who came in because of the hype will drop out as those companies can't raise their next round. But there's a lot of amazing companies out there, and I think you're going to see some huge champions coming out of Canada.
Keep an eye on all of it. Jordan, thanks very much.
Thank you.
Jordan Jacobs, co-founder and CEO, as well as managing partner at Radical Ventures.